Hi everyone, Stuart here again. It's Good Friday. Most global markets are closed. Any Asian markets that are open are obviously closed now. However, we still have got markets in the forex market and the crypto market still offering buy and sell prices. So markets are still open, or some markets are still open across the board. These over-the-counter markets. So we'll have a look at what's going on. We'll wrap up what another very interesting week this week, and we'll also look ahead at next week. Next week's really quite quiet. It's PMIs. It's the final full trading week of April, or those 3 days in the following week. Many and I will be the same. I'll be wrapping up my April account next Friday and starting, although it's still April, obviously the following week. It starts the first week of May. For my trading sets, just where we count the weeks, that's all. What a week. Let me just I was going to start with Bitcoin, but I'll actually, let's start with Bitcoin. So we had quite a significant day yesterday. If I zoom this in as much as I can. So we are generally still in what looks like a fairly weak market, bullish, lower highs, lower lows. We bounced a wee bit here during the end of March, and then we moved down into the first couple of weeks of April, and then we sort of rallied a wee bit, or bouncing a small bit in this second half of April into the 75, 76 zone down here. All the chatter about the excitement about the strategic reserve sort of disappointed, so we moved into these lows at 75, 76 here at the beginning of this key 9th day of April. Was a big turnaround. But anyway, so why was yesterday quite key? Well, for me, it was this break of the 50-day moving average. So for 6 days now, we've closed above the 20 days. Sorry, 7 days, isn't it? 1, 2, 3, 4, 5, 6, 7. Yes, seven trading days. We've now closed above the key 21 moving average. You can see it's sort of started to tilt up a wee bit. The 50 has come down here, the blue line here, and flattened out, and we're sort of bit directionless, as we can see here on the RSI. Remember, this is the key, or one of the key momentum indicators, but it's flat. It's not going anywhere. It's in the neutral zone at 50. The MACD, the MACD indicator here, we've got a cross of the signal line, the MACD line here on the 11th of April. So that's relatively positive. Nice green. Dark green histogram here, but we really, price-wise, we really haven't moved anywhere. So 7 days over the 21 EMA, that's fine. But how many days over the 50? Well, we've had one and then it gave up. We've had one and then it gave up. We tested into it here on the 16th, and yesterday we opened on it and closed above it. So although it's a very small candle as far as as far as momentum and sentiment is concerned, we are over the 50-day moving average, and we're currently trading at 48,700. So 84,700. So this 85,000 handle, 85,500, where we've been unable to close above for the last 7 to 10 days, and also a resistance area back here. We go back to the beginning of the month, the beginning of April, we couldn't break over 85. So 85 becomes key. It's see if, obviously it's lower volumes yesterday, particularly low volumes today. We've got the weekend coming up, and that can be quite spiky potentially. But again, it's just a small. I'm not long this. I haven't bought this or anything from a trending point of view. I'd like to see the RSI a bit more positive. I'd like to see a bit more of an angle on the MACD. But this is the first signs of a potential recovery. But it could give it all up very, very quickly as well. So a break below the 20-day moving average here at 83,500. Would spell more weakness, and again another test into this 78, 76, 75 zone down here. The 76, 75 has been our low zone, hasn't it? But on an intraday basis only, we closed at under 77 on an end of day basis. However, the believers will still keep holding this, and a break over here is good. So a break of 85,500 is key to the upside next week. and again over the weekend. And then the next, where's the next big up target? Well, you can see here the orange line here is the 200-day moving average. Oh, hang on a minute. My head's too big. Let's there we are. Let's see the chart a bit better. There we are. So the 200-day moving average. And what's this line here? Well, this is our Fibonacci key first level, the 38.2 level, from the down leg from the all-time high here we had in January on inauguration day, 109,000, to this collapse we had to sub 75,000 we had here at the beginning of April. So from end of January to the beginning of April, we trended lower. We're bouncing a wee bit, but we bounced a wee bit the first time, didn't we? Didn't go anywhere. Let's see what happens this time. Interestingly, last time, as you can see here, we didn't get anywhere near the 50-day moving average, the last rally we had. So this is of more significance. I would like to see a bigger positive fat-bodied candle before we take this much higher. But we've got some key targets next week if the buyers are going to continue to follow through. There's been a lot of there's been a dearth of news around the crypto space since really that end of February. So perhaps there's some due. Obviously, the markets since the 20th of January have been focused on what's coming out of Washington rather than what's coming out of the economic data and what's coming out of what Mr. Powell might have to say, Jay Powell, the chair of the Fed, might have to say. So it's very much a politically driven, fundamental market currently. So crypto, key levels to look forward to. If you want to put a little alert in there, if we break this 85,500 level on an end of day basis, that would perk up some interesting buys, and I'd be one of them probably. Although my simple crossing moving average strategy would be long anyway here from this point here. It would have been long from the 9th of April. It hasn't really gone anywhere. And my stop loss on this would probably be just below down here somewhere. If this is we trade in this simple 5/9/21 EMA cross, and I would have added here on the break of the 50, and I might have added yesterday. I got ahead of these, so I might not have done as well. But anyway. Depends how we coded it. But yeah, so Bitcoin, the leader of the crypto pack, looking a bit more positive than it has in a wee while. It was looking pretty good here on the 12th, and then it all sort of went to sort of quieting down, should we say, for the last 5 or 6 days. But we're holding the 21 EMA, so that's a nice positive support area. Starting to slope up again now. The 50 is flattened out, looking it to slope up. So we could continue to consolidate through here quite easily as well. But the big upside target, the big upside resistance to the 200-day moving average, and that key 38.2 fib at 87,600 or 87,700, so 8700 is a resistance to the upside with 76,000, 75,000 downside targets for the bears. But at the moment, it's sort of really directions as far as some of the technical indicators are concerned. Obviously, some announcement out of Washington could turn that on its head. I don't know if many of you are here at the moment. It's obviously it's a big holiday. Everybody's celebrating Easter over the Western Hemisphere, but I know there's many of you watching that don't celebrate Easter. So I don't know if you're trading today at all. Let's just review, say, last week, and we'll look at some of the trades we took. So in the indices, let's start with metals, everyone's favorite. So on a daily basis, this week, it appeared we were getting new all-time highs again for gold. Yesterday was a bit of a blockbuster day. So Thursday, what I'm talking about, Wednesday was the blockbuster day, wasn't it? But we did get a new all-time high yesterday as well. And that put that in there. You see that it's $3,357 for a troy ounce of gold. The new all-time high, 16th of April, 2025, for the gold market. So where is it going? Well, it's continuing to move higher, isn't it? It's gone through 3,300 this week. That's the big headline for this week. Last week, it was through 3,200, and there's no holding it back. You see, again, the strength of the move in the size of the candles. There are significant buyers here compared to sellers. We had a 3-day down leg here at the beginning of the month, and that's just been bought back as we went into the key 3,000 level, 3,000, 3000. Round numbers are very key, both psychologically and technically. Sometimes, you see here, we tested it and went straight through it, came back to it, and then through it. 10th again, 10th of April. When we look back at the April 2025, we look, 10th and 11th, some key days for all markets. So gold going forward, if you're still long this, I haven't currently got any open positions on gold. I'd have my stop loss down here somewhere around about 23.33 or 23.30, or even under the 3,200 level, 3,200 level, because it can turn around and it can be quite volatile negatively as well. But at the moment, all sorts of demand combining to give gold not only its safe haven bid, but its general lack of the weakness of the dollar, the sort of the puncturing we've seen this week of the US Treasury market as well. Puncturing is a bit of an overstatement, I guess, but what would have been typically a strong Treasury market as the dollar's weakened, that hasn't happened, although we have seen some good auctions as well, conversely. So anyway, gold is strong. Again, technically, we're in their overbought zone here on the RSI, the 14 setting RSI, and we're at 72.88 yesterday's close. But as you can see here on the MACD lines, nicely positive, nice cross here for the MACD and the signal line. Strong, positive histogram as well, strongest it's been for a while, even at all-time highs. So that's why I always say to people, don't be afraid of buying at highs. Markets that are high tend to go higher. Markets that are lower tend to go lower. The only caveat, again, I would say is the like last week or so, the rally has been quite quite steep. If you're looking at it as an angle basis on our, if we draw on our angles, on our trend line angles, it's relatively steep. It's quite possibly perpendicular, but these strong candles here, the 9th, the 10th, and yesterday in particular. If we look back, it's the strongest series of days for a long time. You can see the strength of that move. So even at these elevated levels, over $3,000 an ounce, gold remains bid. So be very careful trying to catch the top of this or trying to short it too early. Those that were trying to short it at, when it went through these into this level to take this lower, were caught out. They were shook out the market. The weak holders were shook out the market here as it turned around and started to move back up again. So buyers are very much on the front foot still. Everything from, corporations to everything from governments, particularly the Chinese one would assume, and the Russians and others, to corporations and individuals as well. So technically, as I say, we're over 3,300. The 20-day moving average sits at just at 3,130. The 50-day is smack on the 3,000 level, and the 200-day is down at 2,700. So a very strong rally for gold. If you've been longing this, you've been buying gold, trading it higher, well done. We've had some really, really nice run ourselves on the gold market, and it continues to move to the upside. Copper, let's just run through a few of these as well. Copper has bounced back. Copper is suffering from the worry over the tariffs more because it's a hugely influential, obviously, industrial metal. That'll have an impact on the newly industrialized or trying to industrialize mid-cap countries, mid-income countries that are trying to, move forward with their mining and their industrialization. So that's had quite a hit from the high here at the end of March. But again, it's bouncing back. It's right on its 50 fib level at 4.6 or 4.70 is the key resistance, and that's where the 50 moving averages as well. So we need to see a break of that before we can test the 61.8 fib there at 4.833 to the upside for copper trade. I don't know if many of you trade copper, but we're at an interesting pivot point here, the 50 fib you can see how we're pivoting through previous levels going back to the beginning of the year as well. But copper commodities could come under pressure, but they've rallied on the weakening dollar and perhaps the turnaround in global demand. We'll see. Silver 32.50 closed yesterday. Again, similar pattern, much more of a similar pattern to gold, to copper than gold. Hasn't got that safe haven kudos that gold has, although it is a bit of a safe haven currency. It's much more of an industrial metal, and again, used in jewelry and other industrial purposes as well. Silver. So silver back over the big support area at $30 this month, and this week it's continued to move higher over $32. And again, this one is actually showing a much more of an improved bounce back than copper, as it's already over at 60. 1.8 key fib level. It stalled for a wee bit, but it's had a good day on Wednesday, and we're at 32.50 now. Next resistance we tested on Wednesday is at $33, and then back to this recent high that took us to 34.50 to the upside. So silver bouncing back. We've got a nice cross on the signal line and MACD line also on Wednesday, and the RSI's managed to break over the 50 level, although it's flattened out. So it's relatively positive. This, say the cross of the moving averages was here on the 11th. So silver holding up, but gold is by far and away dominating the metals market. Indices, let's just go through these on the upside. We've had a good week. We closed some short positions and then some long positions on the indices. Let's just run through these in order as we see them here. So the Dow, pattern wise, they're all looking the same. They've all bounced into their 20-day moving average and then found resistance at it. There was a bit of divergence yesterday between the Dow and the other two. The Nasdaq and the S&P 500 closed positively yesterday. Thursday, the Dow was down 1.3%. The Nasdaq was actually flat, but was down 0.13 of 1%, and the S&P was up 7 points at 5282. We closed 5282 on the S&P 500. Big pull was Eli Lilly was up 14%. Hertz was up 42%, the rebranding of the car hire company. But the big hit for the Dow was United Health, was down 42% on worries over its online. I can't remember. It's United Health, the big US health insurer, and there's a part of a department, not a department, but a section of the company. Its name escapes me. It's always been performed very well, but some real key questions now around about Medicare and Medicaid provision in that. So remember, it was the CEO was brutally murdered a few months ago, wasn't he? The United Health guy, but excuse me. So that's been under scrutiny since then. But the analyst call yesterday was very left lots and lots of questions unanswered. So the markets hit United Health, which is why the Dow was down significantly yesterday. So we've gone short on the $3 indexes, the US stock indices on the 16th. I didn't set any particular targets, although I put these levels on the chart. I just put a question mark. We did hit this level, so it was programmed to close out. So we took some profits off that. That was a gain of 280 points, I think it was. Was it more? I can't remember. Was it 400? I can't remember what it was. Or we'll go back to we'll check. But anyway, that was we've only got half position now left on the Dow, basically, because we were short here. So the reason was really this persistence of the lack of momentum to get through the 21 moving average. So my stop loss is up here still for the Dow. And you can see here, we went once, twice, 3, 4, 5 days. The 21 moving average is held. Down. I'm happy to hold that up the weekend and see what happens. US markets are actually open on Monday. The rest of the world is still closed. So it'll be a US only market, really, as far as stock markets and treasury markets and the futures market. But that's still very key, obviously. So we're half a position down. Will we get down to these? Are these the big lows? Is this the final sell? 36,500. I should put that on there as a line. Just bear with me a second. I'll put that. So this is this the tariff low for the Dow for 2025, 36,500. Again, too early to tell. I'm not going to make a call on it. I'm just trading it technically. And at the moment, technically, we remain bearish, given that we're under the 21-day moving average. The other key thing, obviously, this week as well, we've had this death cross on the stock markets as well, where the death cross is where the 50-day moving average moves from above to below the 200-day moving average. Obviously, they're very lagging indicators, 50 days and 200 days averages. So usually, not always, usually the worst of the sell-off may have already happened when this actually happens. However, markets have a very, very long memory, and they tend to repeat themselves. So I'm not going to call it the floor's in yet and the selling is over. We still got a lot of the first quarter earnings to come through. The financials in particular have been quite strong. See what the tech companies look like. See how they're bracing to deal with the tariff uncertainty and the chaos that's sort of surrounding many of their supply chains before we make a call on that. But certainly 36,500 is an area to watch on the Dow. But we're still short half a position on the Dow. The S&P 500 closed up yesterday, so we're out of the money on that. But again, similar setup. You can see the persistence of the 20-day moving average. The key line in the sand here, where our stop loss sits, is the 5,500 level for the S&P 500. There's the death cross again on the 50 crossing the 200 here last week. It's week before last, wasn't it? On the 10th. And the 5,000 level is the key support where the buyers came back in really aggressively here, didn't they, on the that huge bounce we saw on the 9th when the VIX went over 45 points, but seems to have cooled since, but it's still elevated at 35. So that's still looking relatively weak. Obviously, we could, this could be that's the bottom so far, where we've just got short here on that, and we could, rocket through here again. Anything's possible. So, we make our money, we lose our money, traders, in this part of the chart, don't we? As technical analysts, we love to look at what happened, where we are, but still look left and look at how low this low is. Well, April 2024. So it's it's not that long ago, is it? It's only a year ago we were down here, and look what happened the year after. After we rallied massively. So, and the sell-off, you'd argue, it's gone longer. It's been more aggressive to get down here. That was a shorter drop down, wasn't it, from end of March to the middle of February. It was just over 2 weeks. This has been going on since the end of February, hasn't it? Our all-time high, 19th, 20th of February. Down, retrace, down more aggressively. Again, see the angle, and the bounce back is quite aggressive as well. Not quite sure about these V-shaped bounce backs, but we'll see where we go forward. But anyway, we're still short S&P 500 and the darling, really, the Nasdaq and the Nasdaq 100, where the seven, magnificent seven, sit, the big tech companies. Somebody said on Bloomberg, I think it was, I might be saying this, no, it was Bloomberg. I think it was Bloomberg. I don't know why they quote this, the Magnificent Seven, as as a great situation. There's only 3 of them actually came back. 4 of them ended up dead. So, take of that as you will. But I thought that was quite an interesting comment. So the Nasdaq 100 again, more volatile than the other two. So we did see a break of the 20-day moving average here and here back in at the end of March as well, but it was short-lived. It didn't even last a day, did it, both times? So we still remain weak. We actually perked in today again through that, unlike we've seen with the other two indices. So it's perhaps a less bearish market, you could argue, but we're still short on that. We're out of the money at the moment. Very small movement yesterday, but the key 18,000 held last week for the Nasdaq 100. 17,000 is where we went below on the shakeout day, and 16,300 was that intraday low. Again, front running the other two on the 7th of April for the Nasdaq. So 16,000, 16,300, 17,000, and 18,000 key areas to the downside for the Nasdaq 100. If we're going to break back up, we need to get back over this first fib level at 18,500, the 20-day moving average at 18,900, and then the 50 fib, where my stop loss is just sort of sitting at the moment at 19,300. So, but again, death cross here on the Nasdaq as well, and the 61 fib of this all-time high to the low sits right on the 20,000 level. So again, going forward, some key areas for the Nasdaq. But as you can see, the RSI remains weak at sort of lower half of the neutral zone at 42. The momentum in the MACD signal line is faded, weak to negative or neutral histograms on the MACD as well on the Nasdaq. So there's a bit of differential between the three, but they're all patterns not very, very similar. Across the pond in Europe, the DAX closed at 21,200 yesterday. Similar bounce back pattern. It's at its 50 position fib at 21,100. Key resistance is at 21,500, where the 20-day moving average is. 61.8 fib at 21,700. The big round 22,000 level, which has provided support for lots of February and a lot of March before it gave it up very aggressively at 22,000. And then the 50-day moving average sits at 22,250. And the 200-day, this is the 200-day down here to the downside. So again, negative 20 under the 50. But we haven't had a death cross on the Dow, on the DAX. The DAX is European equities generally seen a lot of new investment as many investors diverse from the US and into Europe, underpriced value stocks in Europe. So see how the DAX goes, but it's looking relatively busy, but again, still anchored under its 20-day moving average, 21,500, big line in the sand. For DAX traders across the English Channel, the FTSE here in London, 8,200 was recovered yesterday. The big 8,300 level, we still remain under it. Are we going to break over that into the end of the month? And the 200-day moving average just above that at 8,340. A more sanguine chart here in London. The intraday low, the hiatus at the beginning of April took us to just into the 7,500 level, but a really poor performing indices for last year sort of come to life a wee bit, certainly on a trading point of view, and also the strength of the euro and strength of sterling against the dollar, sort of making assets a bit more expensive than they were, but still relatively good value compared to some of the highly valued US stocks going forward. But big resistance coming up for the FTSE, as I say, 3,300, and then the 200-day at 3,350. Excuse me, I have a quick sip of tea. We'll have a look at energies, and then we'll look at the Forex market, because the Forex market's actually open again today. So oil closed yesterday. US oil here on our chart closed at 63.94, shy of 64, but a positive session yesterday and on Wednesday. So we managed to breach the 38.2 fib level and move to the 50 fib level, but that's where we stalled. 63.85 is where that sits, so we're 10 cents above that, and we tested into the 20 EMA at 64.55 yesterday, so that's looking okay, but it's a bit of a rounded bottom, so it's a weak, big, strong sell-off and a bit of a sort of slower recovery. So again, Not want to get too excited about until we're back over the 20-day and looking a bit at some bigger candles like we've got here. We'll see what that brings. But we've got a rising RSI, but we're still below 50. We're still on 40. Where are we? Where we close? 46. 50. MACD still falling. The fall is starting to cool. The histograms, turning less negative. Looking like we may have a cross on the MACD and the signal line. I say we've had this rounding bottom turn up, and but that's in 2 days. We've had quite a significant move. So see what Monday brings when the futures are open again in the United States for WTI. But the big line in the sand, the $65 level up here, is still a bit of a stretch. $67, I should say. Sorry, and obviously all about tariffs and global demand and expectations going forward. Not a lot going on the forex market, as you might expect, although the market is open. The dollar, the story this week has remained weak. If we use the euro as an example, 113.80 we trade at the moment. You can see we've had a good day. Here's that was because I put that big thick line. That was the start of today. So Friday, Thursday, Wednesday, Tuesday, Monday. So overall, we're higher than we were when we opened the week on Monday. So the story continues. Is it running out of steam? Well, maybe. We've had, we looked back over the weeks, 2 big days here on the 10th and the 11th, big day on the 3rd at the beginning of the month. But we're up. We're banging right now, right into 114 again. We can't get over it. It's proving quite a strong resistance for the last 6 or so days. We've been over it once, twice, 3, 4 days out of the last 6, but we haven't been able to close on an end of day basis up. So that's suggesting that's currently holding, but there's no reason to start shorting this, I would argue. RSI is still in the overbought area. We haven't come out of that zone yet. MACD signal line is still rising. And just hang fire. The announcements this week from Miss Lagarde and the crew at the ECB. We looked at that yesterday, didn't we? Still calling out disinflation or lower inflation in the EU. Looking at the impact of the trade tariffs. The main trade negotiator was in Washington this week as well. Came back with very little. We're not clear what the US are wanting from Europe at the moment, and the confusion continues to reign. So weaker dollar, which helps US trade. Trump and Biden will be happy-ish with a weaker dollar, but how weaker it goes, that's also a question. He obviously had his tweet or his Truth Social post yesterday. Calling for Chair Powell to cut interest rates as the ECB had done. But he can't sack him just like that. That's not possible. He put a lot of pressure on him. But they are an independent bank and remain so. Much to the chagrin of Donald Trump, I suppose. He quite likes the presumably the Russian and the Chinese setup where anything he says goes. But anyway, let's not slip into politics today, Stuart. So euro technically remains bid. 20-day moving average all the way down there at 110.85, and a weaker dollar is still transpiring, and same with against all the other crosses. So is it starting to cool? Possibly, but 114. If you look at the weekly chart, it's stellar week last week and a pretty strong week this week as well. But again, if we scroll in, this isn't back far enough, is it? But we're at multi-year highs, obviously, euro, dollar. Same with all the multi-year weakness for dollar pairs. Euro, the yen very much in focus. The yen trade discussions. The discussions with the trade ambassadors of Japan in Washington was added to by Mr. Trump turning up, President Trump turning up. So we got a strong yen. How much further this yen wants to strengthen it's questionable for the Bank of Japan. sort of start putting their obviously that helps start it'll start putting pressure on their teetering recovery. Obviously puts pressure on their exports, massive export country, Japan. And so huge exports, particularly of automobiles from Japan into the United States. Chatter, I think it was just this morning, and talked about Toyota perhaps moving one of its manufacturing plants from Mexico into the US. I think it was the RAV4, I think it was. But anyway, one of the Toyota factories maybe relocating to the US. It's exactly the sort of thing Trump is wanting with this tariff policy. He was talking yesterday about billions and billions already being recouped from the tariffs. I mean, it's absolute nonsense. But anyway, I'm getting off script again, aren't I? So yeah, it's the sort of thing you'd like to see. Grab a great headline, but in the whole scheme of things, one Toyota factory isn't going to make Trump's day, and it isn't going to help with re-election, but in the midterms. But anyway, dollar yen continuing to decline. We're still historically quite high, but as you can see on this chart, I've just pulled it in. Next level is the that low we got to in September 2024 at the 140 level. So downside target perhaps 144. The let's say the trade guy is not the forex minister, the finance minister, but there was some chatter about that the exchange rate was talked about. Not that either can control that, but obviously they can create some significant pressure for their respective central banks. So 140 dollar yen is the next downside target. We're currently closed at 142.30 at the moment. The trend remains very much to the downside. The 20-day moving average at 145.80, all nicely aligned. 200, 50, 20, 9, and 5. Again, just sit on that. Keep your don't let your stop loss get too close, and we're moving down. Sterling 132, big significant move over a key area this week. 132 for sterling on Tuesday. Higher that subsequently as well, so it was a significant break, as you can see here. Well, I'm saying significant, it's because we closed quite significantly above it last time. We came back through it quite significantly as well, so hence the significance of the 132 level. Next is the 130 level here, which we'd broken last week. So again, like with the euro, big rally from its 50-day moving average at the beginning of the month for cable. And again, another one, just sit back, don't get too close. Signs, as with the euro, of the momentum cooling, but we did have 3 strong candles. So there's our 3 white soldiers cooling after 3-4 candles. So, but we're still green even today in very thin markets. So a holding of 132 is key. And interestingly, the shorter moving average now is back. The 5-day moving average is now over 132 at 132.16. So sterling bid against the dollar, as well as all of these are. The commodity currencies, the CAD 135.60 today at the moment. So down again. Last week we breached the 20-day moving average. The 200-day moving average at this key 140 level, and we've been below it ever since. We've ran into the 138.50 zone, and we haven't really wanted to move much lower than that for 5 or 6 days. And we're back to it today at the moment, the 35.60 zone. But so the trend, as with the other dollar crosses, remains to the downside. Very bullish. What's it called? Where the 2 leaders of the in Canada, where the 2 prospective new prime ministers, Carney and the leader of the Conservative Party in Canada, both of them singing from the same hymn sheet as far as defending Canadian independence from this 51st state nonsense that's coming out of Washington, and their own economic future, and looking elsewhere. Interestingly, just on the this everyone wants the US consumer, which is fair enough, and they do buy. They are the biggest economy in the world, and will be for all of my lifetime, I would guess. But you know, only 15% of Chinese exports goes to the United States. So, you know, the Chinese in particular are taking a much more sanguine, much more laid back, much more Chinese or Asian calm way to the chaos that's coming out of Washington on this trade negotiations. They're not chopping around and changing from day to day. So they have a much more long-term view, obviously, because what Beijing says goes, basically. You know, they have ultimate power. It's a communist state. Let's not forget, guys. You know, they have all the buttons in front of them. They do control all the levers, unlike presidents in democracies. Even though Mr. Trump, President Trump, would like to think otherwise. Anyway, yeah, dollar down, dollar CAD, 135.50, a key support area. But as you can see, it was previous bit of resistance as we were going up, bit of support areas as we were going up. But when it was breached, it's a high here, it's a pivot point, turning point here. But as you can see, we've ran up to it quite nicely. So if we just, you know, if it goes this area, this pivot through here, you know, we could move down quite quickly. And the next real pivot area is that area through there at just over 136, 136.20, and then this double bottom here at 134.35. So still pressure on the dollar. I mean, it could turn around very quickly as well, because it's all of this is policy driven, and all of it is, you know, on the expansion of the tariff situation and uncertainty of the tariff situation. Kiwi, we talked about Kiwi lots this week, Aussie and Kiwi. Aussie 63.73 at the moment. Nice strong bounce back. Big line in the sand for the Aussie is the .64 level. The 200-day sits there at 64.74 to the upside. So big turnaround for the Australian dollar against the US dollar. So a break of 64 would be key, but it's previously been quite a key resistance. So certainly some short setup at that point. And we're actually down today in very thin trading. Kiwi similarly, 59.30. We rallied to recent, significant highs going back to last year to November, 6-month highs for the Kiwi at 59.70 yesterday. We were trailing, we were long here from the 10th and the 11th. We took a lot of pips out of that one, didn't we? On the upside, but we, I pushed my, as I said on Discord, I'd pulled the stop loss a wee bit too close. But anyway, let's not whinge. We still took a lot of nice pips out of that, and we're down today. Again, in very thin trade, but again, it still remains bid. We haven't actually got into an overbought situation for the Kiwi dollar, but we are still sort of well bid, and there's the key break at the 59 level. Now the 200 days moved significantly under the 59.59 level, so the 200 is there at 58.85. So bid to the upside. And finally, Kiwi. Finally, the Swiss franc, the daddy of them all, or the darling of them all. Again, big demand for the Swiss franc. The uncertainty dished out by the tariffs has taken us down to 15-year lows here, 81.30 this week, and that doesn't look like changing anytime soon. However, we have got what is an extended consolidation starting now into our 6-day sideways. So perhaps the dollar selling may be cooling next week. We'll tell, obviously, but there we are, dollar on the back foot. On the back of tariffs, the expected lower growth, higher inflation coming through the pipe, through the works. The very weak sentiment data, but the real data is still holding up. But it's all post the tariffs kicked in on the 2nd of April, so it'll be a while before that starts to feed through in the hard data. So going forward next week. So yeah, I mean, from our trading point of view, our where's my Discord? Our Discord channel this week has what was Monday? It was the 14th, wasn't it? There's the 11th. That was Friday night. Previous Friday, we'd taken out. We had all of these positions were open and of all 5 of them, 6 of them all hit target on the Monday. Was it Monday? 1, 2, 3, 4, 5, 6. Yeah, 6 positions we closed on the Monday. We were up 400 points on Monday, 400. Percentage point of view and a risk point of view, they're all equal. You know, if we lose 2%. I'll look at 1%, but anyway, points for you. We've had a good week. We had 1.5 positions on the Kiwi in particular. The stock positions were very good. The big loser we had was so the week before we actually closed down. We were minus 146 for the previous week, last week, and on Monday that meant we were net for 800 and odd, shy of 850 points for April so far. This is Monday the 14th. These were our open positions. The 6 we were running, the 5 we were running, and then we had the 2 stock markets open as well. The Kiwi had hit its first target for 20 points, and we there we go into 58 to 20 hours. We ran and after that, didn't we? Monday night there was no actual new positions. We'd actually been out to a book club. We were reading Whodunit. Japanese Whodunit, a bit like Agatha Christie, or the Honshu. I've got it in here actually. The Honshi murders. It's a bit convoluted, but it's the first book written by this author of 77-year-old altogether. So he's quite prolific. Shishu Yokomizu, an interwar crime writer. Anyway, that's why I was too tired when we got back on Monday night for any new trades. There's the Monday night update. Tuesday evening we had 4 trades open. We didn't do any trades on Monday, so as of Monday night we were 410 or 409 pips to the good. Wednesday we took a hit on the it's a Nasdaq position, wasn't it? Where's the Nasdaq gone? Where's the Nasdaq position we lost? It was Nasdaq. We lost 400 odd points, didn't we? On where's that gone? I can't see it now. I should have wrote it down. It's because it's Wednesday, you fool. That's fine. There we are. On Wednesday was 16th. I've got my date. I'm ahead of myself. So anyway, these were the updates. These were just moving the stop loss up as the market was moving in our direction. There was the new trade. There we are, the 15th. We went long the Nasdaq at 18,943. We got stopped out virtually immediately overnight this morning. I missed the gap down is what had happened after I'd taken it earlier in the day. I didn't leave it till late. Let me show you what I mean by that. If we look at the Nasdaq, and this is just a warning for us all. We got the 1 hour chart. We got back to when we took it. Was it then 50? Yeah, there we are. We'd gone short up here, and I didn't check it into close earlier on, so I wouldn't necessarily close it before the day was out. But that was certainly a warning which I missed because we'd taken it earlier in the day here. If we look at when it was posted, Nasdaq. Where did I say I'd written Nasdaq? New trade, like there we are. There we go. You see the timing there. It was 50. So it wasn't an end of day one. I'd got in before the end of the day because it was looking like it was going to go long, or it was triggering long on my system. So again, another lesson to be learned. Wait till the end of day, Stuart. You know the rules, but it was looking long on a 4-hour position as well. So we'd taken it long there at 18,940, which is sort of up here somewhere, wasn't it? 18,940 it was, wasn't it? Somewhere. Yeah, around about here we'd got in somewhere. It's not on here anymore. But yeah, if I checked it later in the day, we'd seen the gap. And we got, but we didn't get out till sort of 9 o'clock. I think on down here somewhere. I can't remember where it was. But anyway, it was a hit. It was 471 points as we said here. So that wiped out all of our gains from Monday. We were negative. But the rest of the day, we ended up minus 21 for the week by then, because we lost 430 points on Wednesday. We had a gain of 24.25 and a loss of 27. I can't remember where these was. There's the 200. Where's that 201 gone? It's not on there. Why is it not on there? Oh, I can't see that. Plus, where's that 200? I'm just looking at my handwritten notes here, which is not great. Oh, anyway, that's the 40-30. I'm looking at the wrong. Oh, I have to double check this. So it's a 25. That's the CAD yen. Minus 77 is the pound yen. The plus. The plus 21 I'd counted on Monday here. There we are. That's 201. I don't think I've missed it. The plus 40 was the SPX. That was on Monday as well. So that's at 400 points on Monday. So by the end of Wednesday, we were negative 21 points, 9.91. And then Thursday, we obviously closed out all our Kiwi CAD trades. It was 107 points on that one in total. 92.10. That was Wednesday as well. Sorry. Half positions open on the Kiwi. That's what we trailed our stop loss up to 58.90, 59.12. There's the new indices positions, and then we got the market reverse, but we got a total gain of 174.8 pips on the 2 second halves. Those 2 trades we'd taken, one from the 10th and one from the 11th of April. So it was net gain, very nicely done. Thank you. I say it still remains positive to the upside. And then yesterday, that reversal on the Dow, sorry, not reversal, the Dow hitting our first target for 289 points, because it was 578 points. The Dow declined. So we gained 423.63 yesterday, and there's no trades today. So for the week, we are net 401.74 points for the week, for this week. That's added to the 800 points. We were, what was it, 800 points? I think I have to check my systems. Yeah, 850 points. So we're up 1,200 points plus for April so far, with 1 week to go. So it can obviously all turn around a week, but let's hope not. So there's, I put these every day, guys. You don't have to follow them, obviously, but I do know what I'm doing. So yeah, it's up to you what you do with it. The information, it's free. It doesn't cost you anything. So there we go. Next week is relatively quiet. Monday, many markets remain closed for Easter Monday. Certainly across Europe. Europe is completely closed. Australia and New Zealand also closed. The American markets are open. Canada's also closed. No, Canada isn't on there on Monday. So I was planning to do 2 training webinars on Monday and Tuesday. One about pivot points, and the other one, the second one, about, I can't remember, but we'll see if we do those, because it is a holiday and I might actually take the day off. And lots of central banks speak next week as well. Lots of central bankers on the microphones next week. Tuesday, the Bank of Japan's key inflation number. That's looking signs of that ticking up potentially overnight. Tuesday. The most significant speech on Tuesday will be Ms. Lagarde again from, I think she's speaking at some, I've got it on here. It's not where she's speaking. I'll go and check this one, I don't think. Interview with CNBC, so a bit of a coup for CNBC. President Lagarde speaking to CNBC on Tuesday afternoon, the 22nd. So again, not a lot of market moving data. It'll be interesting to see how the Treasury auctions go. The 10 and the 30 last week were quite well taken. See what the shorter term 2-year note looks like. Inventories on Wednesday, private inventories on Wednesday, the APR, the EIAs on Wednesday. PMI start also on Wednesday. So is Germany going to start ticking up with manufacturers? See what these numbers look like across Europe and across the world. US ones are on later on Wednesday. We've also got new home sales, official inventories as well on Wednesday. And then Bailey, head of the Bank of England, has a speech. I think that's also in, I think it's in a, let's see what it is. The IIF, the Institute of International Finance in Washington. I thought he wasn't in the UK. Yeah, next Wednesday. So Wednesday's PMI day, new home sales, and some comments from Governor Bailey on Wednesday. Thursday is obviously Jobs Day in the US, so consider another strong number yesterday. Some more sentiment surveys out of Europe in the morning. Durable goods also, along with existing home sales and the 7-year note auction as well. Next week, Kashkari, one-time big big dove, certainly turned tail on that one. Anzac Day for the Antipodeans, Australia and New Zealand on Friday the 25th. Retail sales from the UK and Canada on Friday as well. And then the key University of Michigan inflation and consumer expectations. Remember, we had that big slip last time that came out as well. So a relatively quiet week data-wise, but obviously who knows what's going to come out of Washington politically. That's the area to watch. So have a safe weekend. God bless to you all. Those of you celebrating Easter, very significant day today, Good Friday, for Christians around the world. The Orthodox and the Catholic Western Christian Good Friday, a lesson on the same day. I'll leave you with everyone's favorite asset, as I say most days, gold. All-time high yesterday, and we closed at 3,328 here on our charts. And euro, currently the other big asset everybody trades, currently available, doing absolutely nothing today though, at 113.80 at the moment. So take care, everyone. I'll see you all on Monday, and have a great weekend. All the best, everyone. Be good. Bye-bye.